Hey everyone, me Kevin here. In this video, we're going to talk about important calendar dates coming up and projections for those important calendar dates. You're not going to want to miss writing these down because they're going to be big catalysts. Potentially, number 2, very ugly because we've got a disastrous number that just came out. And number 3, a tiny little bit of technical analysis on some good old crypto. But first, comment down below if you would like me to do a review of any particular ticker symbol that you have questions about. And I recommend before you comment it, or maybe after you comment it, look to see if somebody else has voted that ticker symbol up, because I'm gonna look at the top ticker symbols in about a couple hours, and then I'll probably do at least a commentary video on it, or maybe some kind of deeper review on it. We'll see. Let's have fun with it. Let's see if you all want to get back into some of the fundamental analysis, which right now we pretty much exclusively do in our course member live streams every single day, which you can use for July 4th. Coupon code FIREWORKS. The prices will be going up. So use coupon code FIREWORKS and get in before the prices go up again. Somebody left a comment the other day. They're like, I don't believe that the prices really go up. And then they went to the Wayback Machine, you know, that website where you can kind of go back into different time zones or like past dates. And they're like, oh my gosh, he ain't lying. The prices really go up. But folks, the good news is this video is brought to you by Public. And you can go to metkevin.com/public and get one free stock worth all the way up to $1,000. Sign up, don't get payment for order flowed, and use Public. You can follow me there at @MeKevin. And folks, let's get into the video. So first, July 5th. Which is tomorrow, we get factory orders. We're expecting a 0.5% month-over-month increase. That's up from 0.3% in the prior month. We'd like to see factory orders come in strong. This is a good sign for global GDP, and especially with the potential of a rebound in China, which is leading a lot of folks to flock to Chinese ETFs and speculate on the Chinese consumer rebounding after lockdowns, which in my opinion has a risk of being a temporary sort of reopening play, but then a longer-term drag as the Chinese consumer is still faced with developers all around their country going bankrupt thanks to the real estate crisis in China. I don't know how much I'm excited to bet on the Chinese consumer, but I do think there are some short-term catalysts to see some big movements here, especially since media all across the world is reporting that, well, hey, China might actually help global GDP stay propped up and maybe the globe can stay out of a recession just because of China. So, factory orders July 5th, 7 a.m. More interestingly, and then we'll get to the scary ones, we get some things on July 6th, like the purchasing managers indices. There are 2. Well, in this case, we're getting 2 reported. Services and composite. Services is expected to come in at 51.6. Any number above 50 means growth. Composite expected to come in at 51.2, which is the same as the prior reads. Those come in at 6:45 a.m. Then we get some good ones, okay? The first thing we're gonna get is at 7 a.m., we're gonna get the new JOLTS numbers. This is the job openings set of data. And we're expecting job openings to come in at 11 million job openings. That's still probably somewhere around 1.8 times the job openings per unemployed people that we have. So even though we're down from 1.9 job openings per unemployed person, we're really not seeing a big drop off here in job openings. However, we've recently started seeing layoffs, and so there are wonders that, hey, if this number misses bad, and let's say it comes in at, oh my gosh, a bunch of job openings were canceled, and it comes in at, let's say, 10 million or something ridiculously low, could that be a sign that affirms a recession is indeed coming? Which, remember, what is terrible in a recession is a firm. In fact, the first day I bought a firm, I said, this is a great play for an expanding economy, terrible play for a recession. Who would have thought at that point, which was like last October, that we'd be talking about, or potentially in the midst of a recession, just a short 6 to 9 months later. Oh well. Anyway, the federal, that JOLTS number comes in at 7 a.m., followed by at 11 a.m., the Federal Reserve's minutes. Love getting the minutes from the Fed because this is where we can get an idea as to how aggressive is the Fed going to get here. What are we going to be looking for? We're going to be looking to see, are we getting any kind of estimates in terms of what's their terminal rate? Are we looking at 3.25? Probably not anymore. We're probably looking at somewhere between 3.75 and 4.25 in terms of the Fed's terminal rate for the Fed's funds rate. In case you don't know what that means, it means we got a lot of pain ahead of us. And the higher number that is, the worse. So we're going to be looking for hints. Are we going to be getting another 75 in July? Maybe, maybe not. Are we going to be getting 50 or 25s towards the end of the year, right? And these are the questions that we'll try to glean from the Federal Reserve's minutes. Again, mark your calendar. That is Wednesday at 11 a.m., all of these times Pacific Standard Time. Now, at the moment, markets are pricing in a 93.3% chance of the Federal Reserve giving us a 75 basis point rate hike in July. So maybe the minutes will just be another backward-looking tool. However, maybe we're not looking for only rate hints. Maybe we're also going to be looking for hints on, hey, do you see any actual signs of inflation potentially peaking? Based on the estimates that we're seeing from what's happening in markets, sure, we see some sectors in terms of commodity prices decreasing. But folks, you don't even want to know what the Bloomberg consensus is for inflation coming up. And when I say Bloomberg consensus, I don't mean like one company's consensus. I mean all of the consensuses together averaged into a consensus, okay? When I tell you what that CPI projection is, you're probably going to vomit. Stay tuned. It's coming up in about 2 minutes. Okay, so Wednesday, July 6th, that will be a busy day. Again, we'll get PMI. The bigger ones are going to be JOLTS and Fed minutes. JOLTS for recession fears. Fed for, dude, like any sign of hope with y'all. Like anything. Anything. July 8th, we'll get... July 8th is Friday. We got some big catalysts coming up on this one. Just 3 business days prior to the CPI release. 3 business days prior to the CPI release. What are we going to get? We're going to get the federal or the unemployment rate, Bureau of Labor Statistics unemployment rate. That is expected to come in at 3.6%, which is the same as the last month's unemployment rate. We're expecting to get a 5% year over year and month over month 0.3% gain in average hourly earnings. If we miss on average hourly earnings, and average hourly earnings come in at like a 0.4, 0.5, or worse, like a 0.6 or 0.7, that's great for workers, absolutely terrible for markets. We are expecting the labor force participation rate to tick up 0.1%, but that's not what people are going to be looking at. People are going to be looking at that 5:30 a.m. release Friday morning of 0.3% for the month over month hourly earnings. Friday morning, something also quite entertaining happens. I go on vacation. Now we'll be back and forth, so it won't be straight. But it's probably the longest vacation yet. And in case you're new around here, let's get you into the tune here. So take a look at this. Beginning of October, I decide I'm gonna dye my hair green. What does that do? It leads to this beautiful rally in the stock market that lasts until mid-November, which is where we peak out right around November 23rd and 24th. I had so much green around me. Stocks green, net worth is at the highest level it's ever been, green hair, everything's green. I'm like, crap, I need a change. And right before I went on vacation to Mexico, what did I do? I decided to dye my hair red. November 25th, I dyed my hair red. And folks, what immediately follows as I dye my hair red? Well, we start getting some volatility, we start getting some pain. I go on vacation, the market drops in December, and we're like, oh man, like December's getting to be a little rocky. We're not hitting all them all-time highs again, right? Then I go on a vacation right before my birthday in January, and what happens? Whee! There's my birthday. My birthday's right there where the mouse is on January 28th. Yeah, sorry about that. So we thought, okay, well, hey, like, no worries, right? Like, it can't get much worse, right? Sure, Kevin can go to back-to-back vacations by going to Florida and then going to Florence, Italy. And that could lead to, whee! Yeah, so I'm sorry in advance. I'm giving you notice as much as possible here. But yeah, I'm gonna be gone and out of town for a little bit. Actually, like the rest of the month, starting on the 8th, and again, some back and forth and stuff. But yeah, sorry about that in advance. Just wanted to let you know. Yeah, maybe I need to dye my hair green again before I go. Oh. But anyway, then at least we have the CPI numbers that we can look forward to, and boy, oh boy, look forward to we can. So inflation, we thought peaked at 8.5%. The last read, we got 8.6%. We're like, oh God, it hasn't peaked. Oh, folks, don't worry. The Bloomberg consensus, if last month was 8.6, on screen. I don't even want to say it. It's on screen. It was 8.6. And then that was last month when we thought, oh my gosh, this is hell, like this is bad. The consensus now is that it's going to come in at 8.8% year over year. And not only that, but the month over month is going to go from 1% to 1.1%. Yeah, month over month, which would be an annualized inflation rate of 13.2%. We're doing just fine, folks. Everything is just fine. Don't worry, July's going to be a great month, especially since everyone's betting on a Fed U-turn. Oh, but don't worry. At least we have good news in that the Atlanta Fed estimate is doing pretty decently. See, take a look at this. The Atlanta Fed estimate says don't worry. Analysts across the board think we're good with GDP. We'll have GDP somewhere around 3% and we're fine. That's the blue line here. It was analysts in general thinking everything's going to be fine. Well, the Atlanta Fed real GDP indicator has been a little more bearish here. At one point, dropping to nearly 0%. But don't worry, folks. The Atlanta Fed GDPNOW estimate is now, oh dear, it is more than -2%. Yeah, it's under -2 for GDP, which if that's the case for Q2 and we just got a downward revision on Q1 GDP, then we probably already are in a recession. And not only are we probably already in a recession, but this recession's probably gonna last a little longer than folks were hoping. But don't worry, folks, at least we could do some technical analysis on Bitcoin. Because, see, this is what we call a double top. And usually what we do when we look at a double top is we look at how low was it on the left and how low was it on the right to get to some kind of equilibrium. And oh god, that's in like the BTC 13,000 range. Never mind, folks. Get yourself a free stock with Public. Use coupon code FIREWORKS. Join the programs on Building Your Wealth. Let me show you and teach you my way of doing fundamental analysis in a recession, folks. Now is the time to be doing fundamental analysis. And even if you watch the live streams and you're like, I'm gonna do the opposite, at least you'll pick up some things along the way and you'll learn. Folks, thank you so much for watching. Happy 4th of July. And Hello Kitty.